At first glance, the overseas trade in goods for August 2024 is a mixed bag. Years after the vote that changed the country's trajectory, the United Kingdom is still struggling to keep its economy up. In this video, we'll be talking about how Brexit has ruined trade relations with the European Union. Let's get right into it. As of August 2024, the UK recorded total exports of £30.9 billion, which is a £1.6 billion increase from the previous month. The only problem is that this is a £3.2 billion decrease compared to August 2023. Now, the total imports stood at £51.2 billion, which is down by £2.8 billion as compared to July 2024. The interesting part is that this figure is up by £2.7 billion year on year from August 2023. What's going on? Is the UK benefiting from Brexit, or is it doing badly? Well, long answer short, the data shows that there has been a trade deficit of £20.4 billion, which narrows by £4.4 billion from the previous month. The increase in export was mainly driven by a huge rise in precious metals, which saw a pretty good rise as compared to previous months. But the UK should be careful because when trading non-monetary gold, known as MNGs, it can be very risky. Trends in trade figures can go all over the place if not monitored properly, and if a country like the United Kingdom doesn't play its cards right as far as politics and international relations are concerned. After Brexit, though, the UK pretty much kissed any good relations with its neighbouring countries goodbye. Ever since 31st of December 2020, the free movement of both people, goods and services with the EU has stopped completely. Collecting data isn't easy either, because most of these statistics between the two parties are compiled directly from customs export declarations in accordance with the requirements of the Taxation Act. But that's when the exports are concerned. As far as the imports go, there hasn't been any major change since 2021. You can tell from this graph that by raising the exports of NMGs, there was a significant increase in the total exports in August 2024. The total decrease in imports, on the other hand, wasn't relying on the MNG imports, since that increased by just a tiny bit. Other than that, out of the total exports of the United Kingdom, only 46% was to the EU, while non-EU exports made up 53%. Exports to the European Union were valued at £14.3 billion. One would think that this would be a huge decline from previous years, since Brexit made trade relations with the EU impossible, but surprisingly, this is a 1% increase from July 2024. Looking at year-by-year comparisons, this is still a 1% decrease from August 2023. In a way, you could say that trade with the EU isn't moving. It's not going up, nor is it going down, which is a huge concern to many in the UK. Similarly, there's been a 10% increase in non-EU exports when looking at the figures in July 2024, but a 15% decrease as compared to the previous year. Imports from the EU sit at £24 billion, which is a 14% decrease from July 2024. Although the decrease from the previous year is much less, the sudden drop is something that should worry a lot of economists. Imports from non-EU countries increased by 4% from July and 15% from 2023. A lot of numbers are being thrown at you, but it'll all make sense little by little at the end of the video. If you're enjoying the information, be sure to leave a like and subscribe to the channel for more content like this. Moving on. Non-monetary gold is something that deserves a separate section in this video. Trends in UK trade have had a significant effect on the NMG exports, especially to the European Union. Things have been pretty all over the place after July 2024, as the graph shows. Exports are falling by 10.8% and affected all kinds of assets, ranging from chemicals to machinery. These are also important NMG trades. But what exactly is the definition of NMG? Non-monetary gold refers to gold that is not held as a reserve asset by a particular body or power like a central bank. Instead, it includes gold coins and scrap metals that individuals hold for investment or other purposes. In other words, it's very valuable and can impact trade really hard. Throughout 2023, NMG exports single-handedly caused all the trade fluctuations in the UK. But in mid-2024, there were periods of low NMG exports while simultaneously having record-high imports. How is that possible? Non-monetary gold is just so volatile. Like all other exports, imports and other trading assets, the one incident from 2016 that stretched till 2020 has affected everything. Let's see what it's been like for the United Kingdom. 8 years after the referendum, 4 years after the UK left the EU, and another 3 years since the transition period ended, the Trade and Cooperation Agreement is working on all gears to find a level ground for both the United Kingdom and countries of the European Union. This graph may be all bright and colourful at first, but it shows how things have dropped to an all-time low for the UK. The referendum changed so much that they had to set up a completely different governmental body to look after whatever is moving between countries of the EU and the UK. The Trade and Cooperation Agreement, or TCA, is a framework that was made to govern the economic and security relationships between the two parties after Brexit. It's responsible for a bunch of things, so to understand the trends in trade and how Brexit has made everything a lot more complicated, let's look at them really quick. The TCA allows for zero tariffs and zero quotas on goods between the UK and the EU, as long as the goods in question meet specific rules of origin. What does that mean? This means that products should be made completely from either the UK or EU if they want to benefit from the free tariff law. When services are in question, the process is a little bit easier. Different sectors have limited access to the market, but they also face more regulatory barriers. Obviously, this wasn't the case back when the UK was part of the European Union. But just because Brexit happened years ago doesn't mean that the EU despises the United Kingdom. It may seem like that at first, but they let each other do things in each other's properties. For example, the TCA calls for arrangements for fishing rights and access to fishing waters. This is all to keep a balance in the quality of goods. It comes under TCA's regulatory cooperation, in which it wants to make sure that trade runs smoothly as long as both parties try to maintain similar standards in different sectors. Security cooperation, on the other hand, sounds like standard protocol at first, but because of tensions between the two after 2016, the TCA can't take any risks, and so it set up special units of law enforcement to avoid any sort of crime from taking place. In a nutshell, trade between the UK and EU now has a ton of custom requirements and checking, which make things more expensive and more time-consuming. The European Union was actually in a hurry with these custom checks because they set up the rules on UK exports at the start of 2021. The United Kingdom, on the other hand, took their time and introduced full custom requirements on all EU imports in January 2022. Let's take a closer look at how the UK's overall trade is doing with other advanced economies. The collapse in trade was a trend for the entire world in 2020. This was mainly due to the pandemic. But as others recovered over time, the UK stayed still and struggled to move back up. The COVID-19 virus was a serious nightmare for the United Kingdom because the timing of it all couldn't have been worse. The advanced economy goods export volumes that the UK tried so hard to keep up fell by 20% during the initial wave of the pandemic. The rebound, which was supposed to be huge, was just a 3% rise. But since a lot has happened since 2021, the United Kingdom has found other bigger countries to trade with, and some say this could possibly be the beginning of economic growth and stability. Without a doubt, the United States stands as the UK's largest export partner. Though the trade value decreased to £4,134 million, which is down by £249 million since July 2024, there have been other countries that have maintained relations with the UK. Germany sits second at a value of £2,574 million, with Netherlands, Ireland and Switzerland following, with values ranging between £2,159 million and £1,556 million. This is a major increase, all thanks to precious metal exports throughout 2024. But when talking about imports, Germany remains the largest source at £5,651 million. Keep in mind that this is a decrease of £908 million as compared to the previous month. Going forward, China is surprisingly the second biggest importer to the UK. So does it look like a post-Brexit UK will do well for itself without the strong relations it once had with the EU? The United Kingdom has been through a lot since 2016. Brexit, the TCA and the pandemic have affected the economy and trade left and right for the country. At first, things were moving very slowly for the country because of the 2020 pandemic and the struggle to maintain stability. While trading goods hasn't been easy, the services sector has shined bright through and through. As of 2024, services exports from the UK to the EU are doing better than goods exports. The services sector now plays a very important role in the economy. London maintains its status as a global financial centre for the country as a whole. The services sector exported around £121 billion to the European Union in 2019. One may think that this would have declined by a lot, but people expect it to rise even higher than that. The actual figure is still unknown, but with the help of the TCA, there has been an improvement in service sectors like finance, legal services, and technology. Looking ahead, 2025 shows a lot of different trends that will shape the trade relations between the UK and EU. For starters, businesses are likely to continue adapting to the new trading environment. Larger firms have generally managed these changes better than smaller businesses. However, small businesses make up a pretty important portion of the trade volume. On top of that, the TCA isn't done with its new rules and services. There have been discussions around sector-specific arrangements that could make customs clearance much easier. Since the UK is also trying to build relations with countries like Japan and Australia, the EU's dealings may complement or compete with them. What do you think the future's going to be like? Let us know in the comments below. Be sure to leave a like if you enjoyed this video and click that subscribe button to see more of our content.